We're going to talk about two stocks that one billionaire is making big bets on, so stick around. Hey guys, welcome back to the TipRanks YouTube channel. Thank you so much for joining me for another video. I'm Richard Allen. Today we're going to talk about two strong buy high yield dividend stocks that one billionaire, Stephen Cohen, is betting big on. So they're two energy companies, both located here in North America, both up in Canada in fact, and they are massive energy companies. Now let's jump over, let's talk about these two stocks. The first stock we're going to talk about is Enbridge Incorporated, ticker symbol ENB. This is Canada's largest natural gas distributor and one of North America's energy industry giants. The company actually controls 20% of natural gas in the U.S. consumer market and has a 25% market share in the distribution of crude oil in North America. So in the entire continent of North America, Enbridge is actually the third largest natural gas utility. So you can see that Enbridge is a massive energy company here in North America, here in the US. And in the second quarter of 2021, Enbridge reported financial results with a mix of positive and negative factors that were generally received as boding well for the company long term. The company's EPS came in at 55 cents, well above the 45-cent forecast, but well below the 65 cents reported in the year ago quarter. Cash from operations also slipped from 2.4 to 2.2 billion. At the same time, distributable cash flow, which the company uses to cover the dividend, rose modestly year over year from 2.4 to 2.5 billion. Enbridge reiterated its full year earnings guidance set at $13.9 to $14.3 billion range. On the dividend side, Enbridge has a 66-year history of reliable payouts. The current payout is 83.5 cents per common share and yields an impressive 7.1% payout. Over the past 26 years, the dividend has achieved a compound annual growth rate of 10%. This gives the dividend a high and sustained return far in advance of Treasury bond yields. Now, Stephen Cohen, his firm took a new position in Enbridge, buying 484,233 shares of the company very recently, and the stake is worth almost $19 million at current levels. But what do the analysts have to say overall about Enbridge Incorporated? Ticker symbol ENB has a strong buy rating, 9 buys, 2 holds, so 11 total ratings with an average upside of 16.28% for Enbridge. Now, at the end of this video, I want you to let me know which one of these two are your favorite. And if you like these two stocks at all, I really do like high yield dividend stocks, and 7% is pretty darn good. All right, the second high yield dividend stock we're going to talk about here is Canadian Natural Resources, ticker symbol CNQ. This company operates in Alberta and British Columbia, Canada. Julie would be so disappointed that I said Canada because she's up in Canada right now. Canada, where the tar sands produce heavy crude oil and the mountain regions hold productive natural gas fields. Based in Calgary, at the heart of Canada's energy production region, I said it right that time, CNQ is one of the world's largest hydrocarbon producers and includes assets in the North Sea and offshore of West Africa. In the second quarter of 2020, at the height of the corona pandemic, CNQ registered a net loss in earnings. But look at this. Over the past year, that has turned around to a strong net gain. The company's EPS for the second quarter of 2021 was $1.30 per share. This is a dramatic turnaround from 26-cent loss of a year ago. And the top line revenue at $5.18 billion was up 127% year over year. So a little different than Enbridge. They are having a fantastic year this year. The big story here, however, has been the company's cash flow. CNQ generated $2.94 billion in cash from operating activities, a massive gain compared to a year ago quarter's net cash loss of $351 million. This includes $1.5 billion in post-dividend free cash flow. CNQ estimates full year 2021 free cash flow in the range of $7.2 to $7.7 billion. Solid cash flows fund a strong dividend. They declared a payment of 47 cents Canadian or 37.5 cents US payable on October 5th. At the current rate, this dividend annualizes to $1.50 per share and yields 4.8%. This compares favorably to the bond market where the 10-year treasury is yielding less than 2%. Now, Cohen's firm has held shares in this company since 2014, but they have a new stake in this company of 774,000 shares total, worth $25.15 million. So they are betting big on this company. What do the analysts think about Canadian Natural Resources? CNQ has a strong buy, 15 ratings, so 12 buys and 3 holds with an average upside. Look at that, 36%. So double that, essentially, of Enbridge. Guys, let me know what you think of these two high-yield dividend companies. Do you think billionaire Steve Cohen is right, or is he wrong to bet on these two companies? I tend to think he's right. I really, really like both of these companies, and I like them in the near term and the long term over the next 5-10 years. So guys, thank you so much for joining me for another video. Let me know which one of these stocks is your favorite down in the comments below, and I'll see you in the next one.